Hey everyone, welcome back. My name is Zane. Today we're going to have a look at Olympus. So what exactly is Olympus DAO, Decentralized Autonomous Organization? Before we continue with this video, allow me to declare that this video is not financial advice. This video is strictly for entertainment purposes and for educational purposes. So what exactly is Olympus DAO? Olympus is a decentralized reserve currency protocol, and it is based on the OHM token supported by Olympus DAO protocol control value. In order not to fall below, OHM is backed by market crypto assets such as DAI and FRAX, FRAX, in the Olympus Treasury. Now they do have a DAO, Decentralized Autonomous Organization, in their brand name, which means OHM holders have the voting powers to decide the future of the Olympus DAO platform. So at its core, it's decentralized reserve currency, building a community-owned decentralized financial infrastructure, bring more scalability and transparency to the world. Now they provide staking and bonding services combined with OHM token. The future they want to realize to be a global trading unit and a medium of exchange currency in the real world. So how does Olympus DAO works? On Olympus DAO, users can participate in two main strategies, which are staking and bonding. They are all attached to the OHM token, enhancing its use cases. Staking is a long-term strategy that rewards OHM to users when staking on the Olympus website. The reward rate can be varied depending on the number of OHM stake in the protocol. So let's take a look at OHM. This is the Olympus native token. It's currently at $629.52, and that could change at any given moment. Now the amazing thing is that in the last 3 months, it's been doing absolutely incredible. In fact, exactly 3 months ago, it went from a price of $332 to over $1,300. This is with a given 24 hours trading period of over $100 million. This is really incredible. So that is the native token. Now, as for the self-reported circulating supply, this is what's been reported to CoinMarketCap, to the public, to the general public, by Olympus DAO themselves. Current circulating supply looks to be 1,663,000. Total supply looks to be 1.4 million. So this market cap could indeed be incorrect. So we're gonna have to do some research to double check this information, but I just want to make that clear as possible. Now, when staking the native token of Olympus, the OHM, users will receive SOHM, which can be used on other DeFi protocols. To redeem the OHM, users just need to burn SOHM. The OHM rewards come from bond sales, which will be discussed. Bonding is a short-term strategy that allows Olympus to own the provided liquidity and reserve assets. Bonders provide LP tokens or crypto assets such as DAI, LUSD, FRAX, and W to buy OHM tokens at a discounted price with a vesting period. So bond sales will generate profits to the Olympus Treasury so that you can mint the native token and distribute them to the native token stakers in the first strategy. And the Olympus platform is providing the following bonds to users. So some of these bonds, they're actually the DIA bond, the FRAX bond, the WETH bond, the OHM DAI LP bond, and it continues. So what is the token exactly? The OHM token as a crypto back and primary token of the Olympus DAO platform, which means it's the native token. It will be minted when users bond with their crypto assets. Then they can decide to stake the OHM tokens or sell on other platforms. To differentiate, backed crypto means that it can have a bigger value than the underlying crypto of the asset. On the contrary, a peg crypto means that the crypto price is sticking to one specific asset price. Therefore, the OHM price can be much higher than the backend crypto. Currently, the Olympus Decentralized Autonomous Organization is in operation and exploring new ways to improve the protocol. The Olympus team released Olympus DAO Pro to solve the existing problems of DeFi. To clarify, swap any assets into stake variations of OHM with the Ollys app to reduce complexity and save you time while making gas fees more transparent and efficient. Now, as far as I know, gas fees have been an issue with many cryptos, especially Ethereum. So actually giving a more efficient way to deal with gas fee is actually a really good thing. And transparency is important as well. Ollys app is currently in development and it seems to be coming soon to the platform, which is good for a lot of people. And to be honest, it's quite exciting. Now, they do have a really simple explanation of how Olympus works. And I think this is good. This is actually on their website. You can check this out for yourself. Really easy to understand. Starting with the Treasury revenue, bonds and LP fees. Bonds sales and LP fees increase Treasury revenue and lock in liquidity, and they help to control OHM supply. Not to mention Treasury growth. Olympus Treasury inflows is used to increase Treasury balance and back outstanding OHM tokens and regulate staking APY. And additionally, the staking rewards of it. And additionally, the staking rewards. As a reward, you actually gain OHM tokens, compound yields automatically through a Treasury-backed currency with intrinsic value. So everyone always loved the sound of intrinsic value because intrinsic value basically puts an understanding that behind this crypto, there is a real fundamental value that actually backs the belief and the investment that's being put into this given crypto. And that's what you get when you look at Ethereum. Ethereum is such a huge network, such a huge blockchain, that it does have a lot of intrinsic value because people need it so much to do various things. Therefore, it's extremely unfair when a lot of people look at crypto as an investment that don't have intrinsic value. There's a lot of cryptocurrencies out there that have real intrinsic value. Now, this protocol was actually launched in May 2021, so earlier this year. And since then, it's amassed a sizable treasury balance as well as a total value locked TVL in their staking pool. So it's really good. So it's a growing platform and it has there's plenty of volume that are going into this platform, that are being tapped into this platform. This is really good. You can see that from these charts. These are the market value of treasury assets and also the total value locked in staking. There's a lot of value going into this, over 3 billion that are locked in staking. Does that sound like a crypto that doesn't have intrinsic value? So this is what I'm trying to understand with their software, with their DAO, because the decentralized autonomous organization gives you the opportunity to basically create anything that you want by rewarding those developers with the token itself. This is good. Decentralized autonomous organization being able to operate anywhere in the world and to accomplish more things freely and in a decentralized manner. By building more apps and dApps and more softwares, this is good. This is giving it more value, more intrinsic value. You can't discount that fact. But something important that we can actually touch on is a reserve currency. According to Investopedia, a reserve currency is a large quantity of currency maintained by central banks and other major financial institutions to prepare for investments, transactions, and international debt obligations, or to influence their domestic exchange rate. A large percentage of commodities, such as gold and oil, are priced in reserve currencies, causing other countries to hold this currency to pay for these goods. So it's actually really simple when you put it into those words. Here's where it gets really interesting, that a lot of people are not fully aware of this fact. Currently, the US dollar is the undisputed reserve currency for the world, but the choice of global reserve currency has changed throughout history. Pre-World War II and Bretton Woods Agreement, the reserve currency was the British pound sterling, and even further back in time, we had the Greek Venetian florin and a lot more reserve currency throughout history. Now, underline of all of this, common sense would obviously tell you that the main reserve currency is gold that a lot of banks hold as assets to ensure our security of money. That's what they tell us, and that's our belief system. However, it works a bit different. It works a bit different when these countries and businesses have to perform trading. It's like they said, such as gold and oil are priced in reserve currency. You can't price it in gold. Well, you can, but you can't trade gold for these assets, and not as far as I know. Now, it actually caused these countries to hold this reserve currency to pay for these goods. So what's better to hold than the US dollar, given that it is a reserve currency for the entire world? Therefore, countries can actually use the US dollars to do a lot of trading because it's a baseline currency that every other currency is supported and backed by the US dollar. So the position of the US dollar as the reserve currency was not caused. Even during the Bretton Woods Conference, an alternative global unit of account was also proposed. In addition, the International Monetary Fund, IMF, today maintains the IMF special drawing rights. Now, this is meant to be a supplementary foreign exchange currency or a foreign exchange reserve. The SDR currently comprise of a basket of currencies including the USD, EUR, JPY, and CNY in the aftermath of the 2018 global financial crisis. Given weaknesses in the dollar, China had called for the SDR to be adopted as the global reserve currency, particularly replacing the dollar. Olympus seeks to build OHM with a similar concept for the crypto. So, ladies and gents, that in a simple explanation is what a reserve currency is. It's there to be a backup currency, to be used as an underlying asset, as an underlying currency. Now, the good news is that this article is actually on CoinGecko. It's really useful. This article goes into a lot of useful information, including how does Olympus work and how does a native token known as OHM actually works. So it goes into some more complicated information, but some of this information we actually spoke about quite early in the video. I don't know if you remember, but we actually already spoke about some of this information, such as initial version of bonding. We spoke about bonding, we spoke about staking, and we spoke about the assets that they use for these bonding and staking and treasury as well. The tokens that they use, the LP tokens, the DAI, FRAX. We spoke about that. We spoke about that quite a bit. But if you want some more information on this for yourself, you can actually check out this article and it's really helpful. So it's on CoinGecko. They also go into more information on how the staking and bonding lead to Olympus' success, which is really crucial for their success because that's their underlying platform business. Without the staking and bonding being successful, well, it will yield less positive results, which is actually negative for the company due to common sense. We've spoken about this earlier as well. We've spoken about the protocol initiation and the market value of the treasury assets and the total value locked in staking. But what we didn't touch on is how will this increase success for Olympus? So by promising a high rate of return on APY, which is basically on their staking pool and pushing their 3-3 game theory meme. Olympus encourages existing native token holders to stake their native token, the OHM. This also encourages investors to either buy OHM from the market or to perform more bonding with the protocol for OHM. This keeps the price of OHM high, protecting the protocol from needing to redeem liquidity from the pool. They go into more information in this article, really great article. Will Olympus succeed? And no one can say for sure. It's usually time that tells if these crypto projects would be a success in the long-term future or in the near future. But sometimes you can actually look at their white paper, look at their underlying business, and you can tell for yourself if they're going to be successful. Now, I do have another article on an in-depth look at Olympus and the not-so-stable stablecoin, OHM. So when stablecoin was first introduced, a centralized model appeared where a blockchain network is used to distribute tokens that have fiat backing held by an audited third-party custodian. Decentralized models still exist today, and the top two stablecoins in terms of market valuation, USDT and USDC, are both perfect example of that type of model. Now, in recent times, decentralized finance, DeFi, or algorithmic stablecoins have appeared like MakerDAO Day. So if you look at Theta, USD Coin, Binance USD, Day, Terra USD, Magic Internet Money, True USD, Pax Dollar, these are some of the ones that are listed. MakerDAO is an Ethereum-based decentralized autonomous organization that issues a stablecoin, Day, which is essentially backed by a mixture of over-collateralized loans, and MakerDAO's repayment scheme. The DAOs are basically frameworks encoded from smart contracts, and network participants influence the organization motives. MakerDAO facilitates loans and it issues tokens pegged to the price of the US dollar without an intermediary. So following the success of MakerDAO's DAI stablecoin, a great number of decentralized stable tokens or stable coins have been joining the crypto economy. Now, CoinsGecko top stablecoin by market capitalization. So you can actually get that information on CoinGecko, the stablecoin by market cap. It's actually really interesting to see that Theta is actually leading the way by a huge margin, mostly because it's 75 billion in market capitalization, while USD coin is 40 billion, 13 billion for Binance USD, and Day has 8.9 billion. It's actually quite interesting just how useful stablecoins are to the economy. They're very useful if you want to be in the decentralized crypto realm or decentralized finance, but you don't want your money to fluctuate too much. Don't get me wrong. These tokens, they still fluctuate. And the more money you have is the more it's going to fluctuate. But at face value, at base value, it's pegged to be as stable as possible, as stable as can be. And we all know what a stable coin is, but this is what it looks like in a 90 days chart, a 3 months chart for a stable coin. Yes, it's fluctuating. So the more money you have, naturally, you will see that money going up and down. And it will look like a lot, but at face value, at the end of the day, it is much more stable than normal cryptocurrencies like Bitcoin or Ethereum. Those are not stable at all. Those could go anywhere from 1,000 to 100,000. These are the top coins. And once again, this is not financial information. This is not financial advice. This is just for the enthusiasts, just educational purposes, and it's news, it's sharing. Now, finally, we're looking at the Olympus OHM token once again. And we're going to take a look at the price at the moment. We're going to go for a price analysis and price prediction, see what we can get. Now, as for the market cap on CoinGecko, that's 3.4 billion. But if you actually look at the market cap on CoinMarketCap, quite an interesting tongue twister right there. It actually currently sits at 1 billion. The first thing that you'll get when you look at this chart is that this token is obviously all over the place. I mean, it's going from $332 to over 1,300 US. So that's high volatility. So a lot of people never really know when to invest in these cryptos because the volatility is so ridiculously high. So you have to be careful with whatever you do. So if we have a closer look, even at some of the highest points of this crypto, when it was like over 1,000, over 1,200, in a matter of days, actually, it dropped from that to around 752 US dollars. Once again, it went back up to almost 1,300. My point is that it's extremely volatile, which simply tells you a lot that while there is a lot of volume being pumped into this crypto, lots of money being pumped into this crypto, you at the same time have to be careful with what you invest in. And yes, this is not financial advice, but this crypto also has a extremely low supply of coins. As an example, on CoinGecko, the circulating supply is actually 5.5 million. That's the circulating supply. Total and max supply are the exact same figures, 6.4 or almost 6.5 million. So extremely low supply, which means that less supply there is the more likelihood that a coin is going to shoot up in value in a much shorter time frame. So you have to keep this in mind whenever you're doing any price analysis, whenever you're doing any charts, whenever you're looking at any charts, you have to keep this in mind. Unfortunately, it doesn't seem to be available on TradingView, and if I go to CoinMarketCap, I don't think it'll be available on TradingView either. So as a quick price analysis, first thing I can say is that you don't really know where this crypto is going. So we actually don't know where the price will be in, say, a month, 2 months, or 3 months, or even a couple of weeks. We really don't know. The patterns that are occurring, they're extremely unpredictable. So you can't really tell for sure what's going on with this crypto. So that's the first thing I want to say. As far as price prediction goes, I can't really make a safe price prediction because I honestly don't know. When a crypto is this volatile and unpredictable, and even the trading volume, yes, the trading volume are rather impressive, like 24 million given 24 hours trading period. Yeah, that's quite impressive. But at the same time, it fluctuates so much as well. You have to be careful. Sometimes it doubles that in trading volume, and it's not necessarily uncommon in the crypto world, but making price analysis and price prediction, you have to be careful when doing this, because I think this is too volatile. I'm not seeing much stability, to be honest, much predictability. The patterns that are occurring are extremely unpredictable. So I hope you've enjoyed this video. Thank you for watching. Subscribe to see more, and of course I will see you in my next